Hello and welcome to my YouTube channel. Today we are going to solve exercise number 4 from partnership final accounts. From the following trial balance of Messrs. Meera and Madhav, prepare trading and profit and loss account for the year ended 31st March 2019 and balance sheet as on that date. See, trial balance as on 31st March 2019 is given to us. If we observe it carefully, it will be declared that this problem is based on fluctuating capital method as there is no current account balance of partner is given. So let's start the item posting first. See the debit side of trial balance first. Stock of 1st April 2018 is given to us. It will be posted to debit side of trading account by rupees 25,000. Debtors on asset side by rupees 80,500. Bills receivable on asset side by rupees 10,000. Then purchases will be recorded on debit side of trading account by rupees 2,08,500. Next is returns. The debit balance of return means it's our sales return. So this amount of sales return will be deducted from sales. So on credit side of trading account, for now we will write it. Whenever we will write this sales, this amount of returns will be deducted from the amount of sales. Next, carriage inward. On debit side of trading account, we will record this item. Carriage outward. On debit side of profit and loss account, we will record it by rupees 4,500. Next is motor vehicle. It's the asset for the business, hence we will record it on asset side. Next one, general expenses. On debit side of profit and loss account, we will record the item by rupees 1,800. Next is export duty. On debit side of profit and loss account, we will record it. Next, advertisement. For 3 years from 1st October 2018 by rupees 4,800. Actually, the advertisement will appear on debit side of profit and loss account. Write the amount on inner column by rupees 4,800 as it's the hidden adjustment for us. We will solve it. Next, printing and stationery on debit side of profit and loss account by rupees 1,200. This item will be written. Our next item is drawings. Meera 3,500, Madhav 2,000. As we know that drawings are deducted from the capital of partners, so we will deduct these amounts from the capital of partners on liability side. Next, leasehold premises. It will be written on asset side by rupees 1,10,000, cash at bank on asset side, and furniture also will be posted on asset side. Now let's see the credit side of our trial balance. First item, bank overdraft by rupees 5,000. This item will be recorded on liability side. Next, bills payable on liability side by rupees 12,500. Creditors on liability side 68,000. Next is sales by rupees 3,25,000. This item will be written on credit side of trading account by rupees 3,25,000. And see, on the debit side of trial balance, returns are provided to us. That is what our sales return is. So this amount of sales return now will be deducted from sales. So sales rupees 3,25,000 minus returns of rupees 1,000, net amount of rupees 3,24,000 will appear on credit side of trading account under the heading of sales. Then our next item on credit side of trial balance is outstanding rent. It will be posted to liability side by rupees 2,000. Unpaid wages. See, these are the wages which are due but still not paid by our firm. That means these are our outstanding wages. We will write them on liability side by rupees 1,500. Next one, capitals of partners. Meera 75,000, Madhav 75,000. These capital balances we will record on liability side of balance sheet. And last item, purchase return. by rupees 1000. All of you know purchase returns are deducted from purchases. So on debit side of trading account we have written the purchases, deduct the amount, and the net amount of purchases will be now 2,07,500 on outer column. Okay. Now in this problem the partners profit sharing ratio is not given to us. See the capital of partners also, it is contributed by them on equal basis. It means that we will have to share the profits and losses in equal manner. Now look at the adjustments. Very simple adjustments are asked to us. See first, closing stock is valued at rupees 32,000. All of you know its effect. Firstly, it will be written on credit side of trading account, and second effect will be given to asset side. Second one, provide provision for doubtful debts, rupees 2,000. See, we will have to maintain a provision for doubtful debts. So on asset side we have written debtors by rupees 80,500. From this amount deduct the amount of provision, as provisions are deducted from debtors. So deduct this amount, write down the remaining amount on inner column because further adjustment is there. The amount will be now 78,500. 80,500 minus 2,000, it will be 78,500 on inner column. This adjustment will have second effect on debit side of profit and loss account, as we are showing the provisions for doubtful debts by rupees 2,000. The next adjustment, create reserve for discount on debtors at 3%. Now we have been asked to maintain a reserve amount for discount on debtors. Our debtors have demanded some discount. So for getting instant payment we are maintaining the discount at 3%. Now see, on asset side of balance sheet we have written the amount of debtors as 78,500. So charge 3% of 78,500, that will be 2,355. This is what our amount of discount on debtors is. So create the reserve, deduct the amount of RDD at 3%. Now right there 78,500 minus 2,355, that is what 3% we have taken. The amount will appear on outer column will be now 76,145. 76,145 will be our remaining amount of debtors. Now its second effect will be given to obviously debit side of profit and loss account, as it's the discount on debtors. So on debit side of profit and loss account write down the amount by rupees 2,355. Now our next adjustment is valued of leasehold premises on 31st March 2019 rupees 1 lakh. See, in balance sheet on asset side we have written leasehold premises by rupees 1,10,000. It was the previous amount. Now in this year this asset is valued at rupees 1 lakh. That means there is the depreciation of rupees 10,000. So deduct this depreciation from this asset and give this second effect on debit side of profit and loss account by rupees 10,000. Now next adjustment is outstanding expenses printing and stationery rupees 500. On the debit side of profit and loss account we have written to printing and stationery by rupees 1,200. In this amount add the remaining outstanding amount of rupees 500. The total amount on outer column will be now 1,700. Its second effect will be given to liability side, as it's the outstanding expenditure. Now in our trial balance one more hidden adjustment is remaining. Let me solve it first. See here, advertisement is there. Advertisement rupees 4,800. We have written it on debit side of profit and loss account. Now the adjustment, hidden adjustment says that this advertisement is for 3 years. It is paid for 3 years from 1st October 2018. See, our trial balance is given as on 31st March 2019. It means in our financial year this advertisement is paid from 1st October 2018 to 31st March 2019. means the expenditure for 6 months we will have to consider. The advertisement expenditure will be considered for 6 months. Then what about the remaining? The remaining one is prepaid, that is it is paid in advance. So let we do the calculation first. In working note, we will find the amount of advertisement which is actually paid for this year. See, you may write in such way: if for 3 years advertisement expenditure is 4800, then for 1 year how much it will be? Do the cross multiplication, you will get the amount of rupees 1600. So 1600 is the advertisement expenditure for our accounting year, academic year. Then we will not consider the advertisement for whole year, because in this year we have paid the advertisement from 1st October 2018. So from 1st October 2018 to 31st March 2019 we will consider this period of 6 months. So calculate the amount now again. If for 1 year advertisement expenditure is 1600, that means if for 12 months it is 1600, then for 6 months how much it will be? All of you know it will be 800. Now actually this 800 amount is our expenditure for advertisement. The remaining amount, that means 4800 minus 800, that is 4000, is the prepaid for remaining period. So what we will have to do? Firstly, on debit side of profit and loss account, from advertisement we will deduct the prepaid amount of rupees 4000. On outer column it will be 800, and second effect will be given to asset side by rupees 4000. So here we have seen the adjustments. Now we have the solution. Look at it. This is our trading account. See, to solve this problem, I have prepared the format of partners capital account separately. No doubt we can write the items of capital directly in balance sheet on liability side. We can do the changes, that is the amounts may be added or deducted. But for understanding purpose, you should not get confused in fixed capital method and fluctuating capital method. The posting should be clear to you. That's why I have prepared the separate format. So let me see. Look at the trading account. Debit side first. To opening stock by rupees 25,000. To purchases, from this we deducted the amount of return. The net amount of purchases on outer column is 2,07,500. To carriage inward 3,000. Then credit side, by sales 3,25,000. From this amount we deducted the returns. Net amount of sales is now 3,24,000. Then by closing stock, as per our adjustment, we have written it. Then our profit and loss account. See, this is our profit and loss account. The debit side first. To carriage outward by rupees 4,500. To general expenses 1,800. To export duty 900. Then the hidden adjustment that was related with advertisement. See, here we have written to advertisement by rupees 4,800. This is the amount paid for 3 years, that is from 1st October 2018. 1st October 2019 to 31st March 1st October 2018 to 31st March 2019 we will have to consider the advertisement for 6 months. So 6 months advertisement is 800. That's why we deducted the remaining amount of prepaid advertisement, that is 4000. So this 4000 will appear on asset side also. The next, to provision for doubtful debts. This is what the second effect of our adjustment is. To reserve for discount on debtors. These two items we have deducted from debtors. Then to depreciation on leasehold premises 10,000. Then to printing and stationery, as per our adjustment we added outstanding amount of rupees 500 to printing and stationery, and now the total amount is 1700 on outer column. This adjustment will have second effect on liability side. Then there is no indirect income for our business, that's why we will not record anything on credit side. Now see, we will close the trading account, do the total of both the sides, find out the balance. The remaining amount will be our gross profit, as in this problem credit side is greater than debit side. So the total of credit side we have written on both the sides, and our gross profit is now 1,20,500. We have brought forward this gross profit to profit and loss accounts credit side 1,20,500. Then at last we did the total of both the sides. We compared the balance and find out the difference. We got the net profit of rupees 96,445. As the in question there is no profit sharing ratio of partners is given, so as per the provisions of Indian Partnership Act, we are dividing the net profit in equal manner. So Meera and Madhav will get equal share in profits. All of you know this profit will be added to partners capital, that is on liability side we will add the capital, we will add in the capital the amount of profit. Now here see, I prepared partners capital account separately. Partners capital account separately means the opening balance of partners capital I have written it on credit side. See here, opening balance of capital on credit side. Then in the trial balance the drawings of partners were given to us. We used to deduct the drawings from partners capital, so instead of deducting it I have written it on debit side. That means ultimately the drawings will be credited. Then the amount of net profit will be added to partners capital. That's why in the partners capital account on credit side I have written by profit and loss account, and the amount of their share, that is 48,223 to Meera and 48,222 to Madhav. So remember that if we want to increase partners capital, the item will be credited to partners capital account, and if partners capital account is their balance is to be deducted, means the item will be debited. At last I close partners capital account. The differencing amount will be taken in balance, will be written in balance sheet, that is the balance carried down 1,19,723 and 1,21,222. These amounts will be considered in balance sheet on liabilities side. See, this is our balance sheet. On liability side I have written the amounts of capital. The next items are there: bank overdraft, bills payable, creditors, outstanding rent, unpaid wages, outstanding printing and stationery. Then debit side, that is asset side. Motor vehicle, leasehold premises, we deducted the depreciation. Furniture, debtors, we deducted provision and RDD. Then bills receivable, cash at bank, prepaid advertisement, closing stock. At last we will do the total of balance sheet. It will be 3,30,445. So for now we will stop here. Thank you.